I'm Caroline Hyde at Bloomberg Studio right here in San Francisco.
And I'm Ed Ludlow, also in San Francisco. This is Bloomberg Technology, and Caroline, tech earnings are here. Texas Instruments, Microsoft, the market treading water until those numbers hit.
And this is why we're in San Francisco for this week. This is why we look at what is already some optimism, some hope as a futures market already signaling it. Let's talk about all those headlines. Microsoft rising after profit. Cloud revenues, they beat estimates.
Plus, the Justice Department in 8 states are suing to break up Google's ad business.
And senators blast Ticketmaster CEO over soaring ticket prices and a terrible customer experience. But first, let's check in on the customer experience for you and your markets today, because it was an awful one for at least 4 stocks that overall didn't get an opening auction on the day. The S&P 500, what a tumult we had at the open as we had a technical glitch. This is a technology story at its heart. And we saw, actually, the S&P managed to trade flat after a tumultuous start that the NYSE is currently already looking into. NASDAQ under pressure up 0.3%. We are worried about these earnings that are starting to drip out, and already perhaps we see reason for that to flip. The futures market is higher. We saw actually bonds getting a bid amid some of that nervousness. Bonds yields are down as we see stocks fall. Let's flip it on, because I want to look at what's happening in terms of where has been on a power stretch. It's the ARK ETF. Cathie Wood's ETF has been on a roll. In fact, ready to have its best month we are likely to see in I think it's 3, at least since 2020, when, of course, she first roared into the scene. Cathie Wood currently seeing, I think this is overall the ARK Innovation ETF, if you go back from the start of January, having its best month in about 2 years, Ed.
Yeah, and you can't get away from the earnings story. That is what we've been waiting for first 3 weeks of this year. Texas Instruments so important because its chips go into so many things. Quite a muted reaction in after hours. In the fourth quarter, we saw a sort of decline in sales from first time since 2020, but actually you go straight to the first quarter forecast, tepid relative to what the street was looking for. But they said while there was weakness in all end markets, automotive has been spared. Let's flip it on to Microsoft, because this is the key name, the first mega cap to report. Profit was the focus. Strong fiscal second quarter, EPS at $2.32 a share, above analyst expectations. The other way of looking at it is that actually EPS did not drop as much from the same period a year ago as the street had been looking for. The broader story, if you look into my Bloomberg terminal, when we talk about that bottom line, was the performance in strength in Azure Cloud. How often has that unit, Caro, been in the headlines of late? And that's where we'll go straight to first with Jefferies analyst Brent Hill, who has a buy rating on Microsoft. Welcome to the show, Brent. Simple question to start with. This is once again Azure saving the day, isn't it?
Yes, Azure's one component. Office was also very good. I think the balance of growth and profitability is keeping Microsoft alive. Remember, going into the print, everyone was super fearful that Nadella had shared, a tech drought for 2 years. The U.S. was going to get worse. So they certainly brought expectations down in front of this print, but delivered what was an okay quarter. No one was going to do backflips over these numbers. There's no question technology spends slowing. It may get worse in the back half of the year. They have another quarter of tough comps. So, let's not break up the champagne glasses at this point. But relative to the fear, way better than expected.
Yeah, I think that's an interesting point. I think when we look at Azure, the business, 100 basis points better than guided, then you kind of think about this idea that I think EPS dropped 6.5%. The street was looking for a 7.5% drop year on year. When we look forward to the rest of the year, what is the story for Microsoft with this broader economy? Is it going to have to rely on its cloud business?
Yeah, it's all about the cloud. There's no other story here. It is the cloud. I think as we go deeper into the year, I think this concept of IT budgets are shrinking. Can Microsoft do more with less? And what we're hearing in a lot of the interviews is CIOs are continuing to consolidate their spend onto Microsoft. Microsoft has been vicious about contract renewals. They don't budge when CIOs try to renew. So relative to a overall tech environment that is slowing and decaying, Microsoft is going to do relatively better in that environment. And it's about consolidation and taking spend from other vendors. So I think other vendors are in a way worse position. The portfolio, the durability of their revenue, the quality of this management team should be able to cut through this. But I think really investors are trying to ask, what do I pay for the stock that's got $10 of earnings power? It trades at a mid-20 multiple. So it's not exactly cheap. It's not expensive. It's just kind of right in the middle. So I think that's a concern.
Okay, so your price target, of course, Brent, is 280. What takes us there, and what do you want to hear on the call?
I think we continue to want to hear about, they haven't guided in this release, so we need to hear guidance, and that are things, Nadella said this, that things may get worse inside the US. What's happening in the US market and the rest of the world? Ultimately, can they commit to double-digit growth? They've talked about a framework of having double-digit growth with margin improvement. Can they hold that? And so I think overall, everyone is really just all eyes on what's going to actually happen with overall growth for the rest of the year.
Brent, I'm pleased to say you're going to be sticking with us. Brent Thill, just hold on one moment because we've got another key technology news of the day we've got to digest. Justice Department, 8 states as well, also in Google over the search giant's ad dominance. Bloomberg's Emily Birnbaum is with us in D.C., having the details for us. Emily, take it away. What overall is the argument coming from the United States against Google?
Right. So today, the Justice Department in 8 U.S. states announced their long-awaited case against Google. They're alleging that Google has abused its dominance in online marketing, that for every $1 that advertisers spend on its litany of online advertising tools, Google takes 30 cents. So essentially that they've harmed competition online, they've made life harder and more expensive for advertisers. And this is the second case that the Justice Department has brought against Google. And some experts say this is potentially a more winning case. And I know everyone in the tech industry is watching really closely.
They certainly are, including Google, which has itself responded. Emily Birnbaum, we thank you for that. And let's get the take of Jefferies analyst Brent Thill, who has a buy rating on the Google parent Alphabet. And regulatory headwinds, we know they're abound for many a tech name. But from your perspective, the fact that Google is saying there isn't sort of legal founding for this, do you agree?
Look, every legal case that's come, they found a way around it. And so it hasn't slowed them down yet. I don't think this is going to slow them down. It's hard to handicap the case, to be honest. But we've been living with regulatory headwinds in the internet for so long. It's really hard to handicap. I don't believe this is going to have any impact. Ultimately, at the end of the day, Google's providing a service that's helping us as consumers get places, find items. I do not right now have any belief that this will have any material impact on the business. There's been tons of legal scare tactics. So right now it's really hard to handicap. And I think this is why Google's trading at such a low multiple, as everyone's concerned at some point could something happen. There's been no precedence that had any issue on the core business that has slowed them down so far.
Yeah. I mean, Brent, Google said in a blog post that the lawsuit, quote, attempts to pick winners and losers in a highly competitive advertising technology sector. They say it largely duplicates an unfounded lawsuit by the Texas Attorney General, much of which was recently dismissed by a federal court. Is this, though, Brent, even if they manage to win, it's a cost headache, but it's also perhaps costing them in terms of innovation? Is it just a distraction? What do you worry about the opportunity cost here?
Yeah, it's a distraction. They're focused on innovation. Their innovation has not dropped. I mean, it's like every other turn we hear some legal case. And again, this has been across internet and across a lot of tech names. It has not cost them any innovation yet. And ultimately, if they broke up pieces of the business, it'd be a concern. But so far, we just haven't seen it. So really, in our opinion, not much to say at this point other than it's a distraction, and their job, and they have done this very well, has kept their eyes on the road and kept focused.
I'm looking at the share reaction during Tuesday's session. We're down 1.7% all told once the market had closed. This is a department, the DOJ, that looked at this under the Trump administration. It continues to look at it under the Biden administration. When you're an analyst covering this stock, how much is the risk of serious action with serious results modeled into your price target?
It's modeled in because you have a multiple that now is trading at a very big discount. So I don't think anyone that's investing in the internet names is investing right now without the understanding that this is an issue. This is an issue for Amazon. It's an issue for Microsoft. It's an issue for Facebook and Meta. It goes across the board. So I don't really see an issue that is going to create, at this point, a big concern. And again, you've seen Google stock over the last decade continue to power higher. So we'll keep an eye on it. We're certainly cognizant of it, but so far I don't think there's enough for us to really hang our hat on anything at this point.
Brent, the other story dominating the headlines is layoffs. You know, we cannot get away from Alphabet and Google being another company that is pulling back. What surprised Caroline and I were some of the specific areas, even artificial intelligence, where competition with Microsoft is heating up. Again, what do you think that means for Alphabet's business, the action it's taken on headcount reduction?
They needed it. They hired, in the mid 20% growth rate. So we think this is pretty common. Microsoft, Amazon, everyone is taking action. The environment's slowing for tech. They all have to slow their headcount, and they all have to effectively go through and really re-examine who they've hired. And not everyone's going to work in any business, right? So at least 5% of this is just removing hires that don't work. The other 5% plus is trimming. We're not discounting there's going to be potentially more changes to headcount. I think that is still open, and I think we expect more cuts to happen across tech. So I think this is the first wave, but I think this is very common. And to be honest, I think Google should have acted faster. They're one of the last ones to jump in the cost cut pool. Salesforce, you go through the list, everyone's already done it.
They have indeed, and we'll still see if more is to come. Brent, so great to have you across these two key stories. Brent Thill, he's Jefferies analyst. We'll let him get off to, of course, the call for analysts with Microsoft coming up in about 20 minutes. Meanwhile, let's get to another key story that just broke. Rupert Murdoch is scrapping plans for a proposed merger between Fox and News Corp. Murdoch had, of course, sent plans to put back together a media empire that he split back in 2013, but he indicated that he and his son Lachlan have determined that a combination is not optimal for the shareholders of Fox and News Corp at this time. The Murdoch family, remember, has about 39% voting stake in both News Corp and approximately 42% of Fox. Ed.
More media movements. Now, coming up, a union alleges YouTube is trying to derail contract workers from organizing in Texas. More details on that Bloomberg story next. This is Bloomberg.
Bank of America, some stock compensation being announced, and for those who are earning up to $500,000, so $500,000, they are now eligible to receive, once again, a pool of restricted stock. This is rewarding basically a majority of the entire employee base, which was up to about 96% who are earning $500,000 or below. So still sticking to that reward compensation to try and keep their talent, even though they saw some downdraft on their revenues of 2022. Let's shift gears and let's talk about staff and relationships with executives elsewhere. Alphabet apparently is illegally using return to office policies as a tool to try to derail YouTube contract workers from organizing in Texas. That's all according to a complaint filed by the Alphabet Workers Union on Tuesday. Bloomberg's Mark Bergen joins us now for more on this. And Mark, fascinating that we're seeing this move. Who of YouTube are trying to organize? What parts of the business, what kind of contractors?
Yeah, these are contract workers for YouTube Music, which is their Spotify competitor. They're based in Texas. And they're alleging here with this complaint to the National Labor Board that as soon as they started ramping up their unionization effort, they got calls to come back to the office. And if they didn't come back, that they might find themselves to be terminated. As Google, as we remember, is one of those companies that has this 3-day-a-week policy that they're sort of enforcing. It's unclear how strictly they're enforcing it. In this case, it seems to be pretty strict.
Here in the Bay Area, lots of Alphabet employees, lots of Google employees. Lots of them are contractors. That's what's been surprising, especially in the recent headlines around layoffs. That's become a flashpoint for the company. Why? Why is this an issue?
It's something that's come up from a lot of their full-time employees that have complained here that they have this two-tiered system where they're contract workers. They don't have the same benefits. They don't have the same equity as a regular sort of Google engineer might have. You know, this is sort of like you were just talking about regulation with the big tech companies, sort of baked into like We're seeing this at Apple, right, with their retail employees. We're seeing this at Amazon with their warehouse workers, Microsoft, their video game employees, and then various parts of the Alphabet, Google empire have been raising this issue around contract workers. In this complaint, they explicitly said, no, Alphabet, you are the joint employer,
yes.
As in addition to Cognizant, which is the actual employer. That's something that Google Alphabet has actually pushed back on in court filings and said, no, we're not the employer here. This is the contractor who the employer.
Dig into that a little bit more, because representatives of both Alphabet and Cognizant didn't immediately respond to requests or comment. But ultimately, this is about the contractors being employed through Cognizant and Alphabet trying to say, look, we're sort of a step removed here. Yeah,
this is something, I mean, it's not just the tech industry, but they've adapted this practice recently decades. It'll be interesting to see with the layoffs that you're just talking about. It's more like, Google, YouTube, they still want to grow. YouTube Music still wants to compete with Spotify. They still want hundreds and thousands of employees out there that do what these workers in Texas do, which is they actually comb through the library to make sure, like...
That's what I was going to ask you. I mean, is there a specific job function that their argument allows them to leverage this rule in the return to office argument? I mean, what is it that they're doing?
Yeah, my understanding of these workers, they're not like the content moderators at YouTube that will screen for violent footage or child pornography. They're actually like looking at, oh, this video is a music video, this one's not. This music video comes out from this label, right? These are all these kind of behind the scenes, ghosts in the machine laborers that YouTube relies on. My guess is they might actually have to rely on these people more now that they just cut 12,000 full-time employees.
All right, Bloomberg's Mark Bergen, thank you very much. I actually want to stick with Alphabet and its research lab, DeepMind. It's taking a hit outside of the US. The AI unit will close its Edmonton, Alberta outpost and lay off some operational staff in the UK as part of the tech giant's reset effort to cut costs that we've just been talking about. Impacted engineers and researchers will be offered the option to relocate to other offices, but those in other roles, unfortunately, Caro, will be laid off.
Meanwhile, coming up, let's flip gears and look at innovation coming from Amazon. It's a $5 a month subscription for generic drugs. Latest venture coming from that e-commerce giant. This is Bloomberg.
Season is here.
Big banks, that was the big story.
From the big banks to big tech.
Everybody is losing a lot of money.
It's a question of how high the bar is set.
Bloomberg breaks the numbers first.
A blockbuster number.
Blowing through estimates.
These guys are minting money with exclusive expert analysis.
Does this approach make sense to you?
We're going to have to make an acquisition.
This quickly become just a really crappy business model.
I don't think their business is as broken as the world thinks.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
So, you pay $139 a year for Amazon Prime in the US. Would you pay another $5 a month for a drug subscription service from Amazon? The e-commerce giant has started RX Pass. You have to be a Prime member, and you can order from a menu of 53 generic medications, which Amazon says can treat more than 80 health conditions. RX Pass is available in most US states, but if you're in California, Pennsylvania, and Texas, you're gonna have to wait. The pitch, low-priced, simple medications on a monthly basis, but you can't use government insurance. And it's not clear what's new in Amazon's subscription offering. The tech giant's already offered Amazon Pharmacy since 2020, where Prime users can already pay for subscriptions using their insurance, or you can get discounts on medicine if you want to pay cash. So this is a Bloomberg story that caught our eye on Tuesday morning, mostly because I thought I'd heard it before. Amazon announced back in 2020 Amazon Pharmacy, where you can use insurance, and if you choose not to, you pay a bit of cash, but you get a big discount on drugs. So this is very similar, but it seems to be that subscription part of it. And there was some reaction out there today to this news.
There was, particularly from competitors' stocks, which fell, unsurprisingly. GoodRx has been a company that time and time again, when we've questioned the CEO, he said, look, Amazon is not our threat. We can be innovative. But now a lot of analysts are out there and saying, well, innovate, because if you think about what Amazon is offering, $5 a month, it's not going to compete versus GoodRx if you're ordering just one drug. But if you're ordering 1, 2, 3, $5 a month is really cheap versus what they're going to be offering.
But as we said in the piece, you can't use government insurance. There was another part of that which was interesting, not available in California or Texas. In other words, the country's most populous states, and Amazon actually did not give us an explanation as to why, which I thought was interesting.
You got to kind of gut check it and think that it must be to do with getting
regulation
hoops.
or
signing off, crossing the T's, dotting the I's. But overall, this is a company that has time and time again been focusing in on how we can become more addicted to Prime. Well, seemingly by offering some healthcare, that's the way to do it. Meanwhile, coming up, well, more on Google's lawsuit, what it means for the future of the advertising industry. We'll get an insider perspective. David Cohen, CEO of Interactive Advertising Bureau, is going to be with us.
Yep, and of course, well, who else? Musk, testifying for a third day in that Tesla fraud trial on that 2018 tweet. We'll have all the details. And he has been speaking now for 3 days straight here in San Francisco. That's next. This is Bloomberg.
Google has engaged in exclusionary conduct to severely weaken, if not destroy, competition in the ad tech industry. As detailed in our complaint, we allege that Google's anti-competitive conduct extends to 3 significant elements of the digital ad buying process.
U.S. Attorney General Merrick Garland there speaking at a press conference on Tuesday. So let's get right back to that key story of the day, the U.S. lawsuit to break up Google's ad unit. And let's bring in an expert in the space. David Cohen, CEO of the Interactive Advertising Bureau, an organization that develops industry standards, conducts research, provides legal support for the online advertising industry, boasts about 700 members, in fact, including Google, but also Netflix, Twitter, Meta, Spotify, many, many more, just off the back of your annual leadership meeting, David. And I know you can't speak as if you're Google, but tell us, everyone must have been discussing this. From your perspective, how does the advertising tech world currently function? Is it a competitive space?
Well, it's great to be here, and thank you for the question. We just hosted about 1,200 folks in Marco Island across the digital ecosystem, and we had 2.5 days of conversation around privacy, public policy, addressability, the future of streaming, a healthy and open ad-supported ecosystem. I will tell you, from where we sit, and we kind of go out to our membership every year with a survey, there is widespread belief that there is healthy competition. We have a very, very long tail in the internet ad ecosystem. We have millions of small businesses that rely upon advertising. And yes, we do have some larger players. But this news, which actually just broke today, I certainly did see it. We have not dove into it in any way. Just finished our conference about 2 hours ago, but obviously we'll be closely watching.
What was interesting is that many have used the anecdote that this is like Citibank or Goldman owning the New York Stock Exchange. How is it different? Can you get us under the skin of how the infrastructure that Alphabet owns and operates is different from, say, a bank owning the NYSE?
There are lots of companies that own multiple parts of the ad tech ecosystem, of the supply chain in the digital ecosystem, and the end beneficiary is consumers. Consumers like convenience, they like lower price, they like ad supported, they like free internet, they like free information, entertainment, communications. There are lots of examples of this beyond just Google. So I'm not sure why it's not just a Google situation. Folks do play on both sides of the equation, and the end recipient of that is a consumer winning.
Hey, David, let me come at it this way. The DOJ alleges that Alphabet, or Google in particular, dominates the market for search, but also dominates the market for advertising technology. You lead an industry association for advertising. Does Google dominate the market for advertising technology?
There was a report that recently came out, I believe it was in the Wall Street Journal about a month ago, that reported that between Google and Meta, they represent less than 50% of the ad-supported ecosystem in the US. That is a change. That is a decrease over time. Are there players that have significant influence and significant share? Yes. In lots of cases in the industry, whether you talk about detergent, chocolate, autos, there are lots of examples of leading players that have significant market share. I do not think the ad-supported ecosystem is any different than other categories.
Of course, David, you're the Interactive Advertising Bureau CEO, and I know one thing top of your mind right now is streaming. It was interesting, this weekend gone actually, Lucas Shaw out in LA, our correspondent covering that industry, interviewed the new CEOs of Netflix. And I'm paraphrasing, but they basically said they got to an ad-supported tier and they got to advertising when they realized they better get moving because of the competitive landscape. Where do we stand with the streamers, those newer players and those longer legacy players, in how they are contributing to that marketplace?
It represented a lot of our conversation over the past 2.5 days. In fact, we had Jeremy Gorman from Netflix as a speaker on the stage. He talked about they're getting into the ad-supported streaming space. It's still early days. They have a minimum viable product, and they're very excited about growing that, driving innovation and scale. There is absolutely no doubt that we are seeing a very, very quick shift from linear television to the streaming space. Ad-supported streaming is clearly where the action is at, and there's obviously lots of competition in that area. We host something every year which is called the New Fronts, which is basically a celebration of what is the opportunity in the streaming space, which is coming up in May for the general upfront season when advertisers go to the market and buy for the upcoming year.
And what does the environment seem like, David? Everyone's been worrying that earnings are about to be upon us, and we're waiting to hear how these companies have navigated a slowing advertising environment. Is that what people are worrying and seeing in their business?
I think that's exactly the right word, is slowing. What we have seen, and we actually do research on this topic, we go out to the market, we interview buyers, and we believe that this year will be a growth year for the digital environment, but it'll be a far slower growth year than it has been historically. Overall, we see that the advertising space will grow about 6% in 2023, and there are areas that will decline, linear television as an example, and there are areas that will grow significantly. CTV, we have growing 14% year on year. And once again, that is coming off of a year of explosive growth in 2021 and 2022. So a year of growth, but a year of slowing growth.
A year of growth, but a year of slowing growth. I think that's something we've heard time and time again from this industry, Caroline. David Cohen, CEO of the Interactive Advertising Bureau, thanks for joining us hot on the tails of your annual meeting. Now, on to Elon Musk. Who else? He told a jury he was confident he could have pulled off his proposal 4.5 years ago to take Tesla private, saying he's never had any trouble raising money for his companies. I want to get straight to my colleague over at that San Francisco courtroom, Bloomberg's Malati Nayak, who has been covering Musk's testimony for the last 3 days. This all about, of course, those tweets in 2018 to take Tesla private. Malati, what was the takeaway from day 3?
So looking at day 3 and day 2, it was almost like a tale of two Musks. Yesterday, we saw Musk who was mumbling, looking for words. Today, we had a very confident Musk who took the stand. He was making very good eye contact with the jury. And yesterday, he had admitted that he didn't get enough sleep. But tonight, he probably slept last night and was back in court today in full form. Some of the takeaways today were Musk basically touted to the jury his record when it came to investing, raising funds when it comes to investors. And he said that every financing round that he has ever had, under his watch has been oversubscribed. He talked about how he had the best record in the world, perhaps, of raising money when it came to investors. And he also said that he was always truthful to investors, and that's why investors would just give him the money. We also had a lot of questioning from his own attorney, Alex Spiro. So I think he was a lot more comfortable. And then we had the attorney from the plaintiff side who tried to sort of land some of these gotcha moments, but they didn't quite happen. Although he did get Musk to say that he hadn't previously talked about the SpaceX shares, which he said yesterday he would have tapped into to finance the deal.
Ultimately, taking a step back, Malati, is he doing enough of what's required of him to fight off the allegations of the shareholders?
I think, he came with these good catchphrases talking about how he really cares about investors and wanted to do right by investors. He repeated how, there was unequivocal support from Saudi Arabia. And when he said funding secured, he actually believed that Saudi Arabia was committed to this deal. So I think that, he definitely brought his A game today. And he definitely sort of, ensured that there weren't any punches that landed from the plaintiff's attorney, except for a few here and there.
Malati, this was probably the 3 days of this trial that everyone was most excited about and most tuned into. But we have a little way to go, don't we? What's left in this process?
So we have a few more witnesses lined up, and this is a 2-week trial. So things are fluid, and in fact, today the judge was concerned that we're running behind schedule. So I'm guessing the trial could end around the first week of February, and then we'll have to see how long the jury takes to come out with a verdict on whether Musk, what his thinking was behind these tweets.
Malati, Nayak, we thank you so much taking time out at that very courtroom to come and speak with us. Thank you. Meanwhile, coming up, we've got to get into the world of crypto. For example, Celsius might create a token of its own to get itself out of bankruptcy. What else is happening in the crypto space at the moment? We're going to talk about it all with Blockchains Association's Kristen Smith. This is Bloomberg.
There were clearly inter-party transactions and loans that were not well understood by the various stakeholders, and we'll see what the courts have to say about that. So there's multiple entities that will likely file suit. The Winklevoss brothers have said theirs is pending. Furtree has one. So we'll see if the court forces disclosure of all this and what that means for legal ramifications.
That was Van Eck, head of digital assets, talking about the commingling of crypto funds within firms like FTX. Today, Tuesday, Bloomberg learned Celsius is considering a new token to repay creditors and exit bankruptcy. Another headline that's caught my eye on the Bloomberg in the last 24 hours, Binance conceding it mistakenly placed user funds with its own reserves. A lot to pass over. Let's bring in Kristen Smith, Executive Director at the Blockchain Association. I guess it's a group, you serve as a liaison between policymakers, industry participants. Negative headline, Binance concedes, using funds mistakenly stored with its reserves, issuing a token to make up to creditors. I mean, it's an impossible question, but what is your reaction to all of that? Continuous negative headlines, I suppose.
Yeah, no, listen, it's obviously been a challenging year for the crypto industry, and we're continuing to see a lot of interesting headlines. I think if there's any silver lining to all of this, this has been a real educational opportunity, particularly for policymakers as they're trying to get up to speed on a very complex industry. I do think, you know, when we see headlines around Binance, I think there's probably deeper details in the backstory. I mean, Binance.com is not a U.S. operated company, but it does pose these questions. How do users who are giving their assets to a third party know that they're actually there? And I think some of the U.S. companies have some really innovative proof of reserve systems in order to do that. But all of this really gets back to a conversation about how do you hold digital assets? Hey, how cool, you can hold digital assets yourself. You don't have to rely on a third party. Or if you are relying on a third party, how do you know they're reliable? And so, yeah, we're all thinking of this as one big, giant, ongoing teachable moment at the Blockchain Association.
Teachable moment that continues to kind of confound and amaze in some ways of the resolute optimism within a space where many hear of perhaps the new CEO of FTX going through a bankruptcy proceeding, is then talking about how they could perhaps resuscitate the FTX product here in the US, and therefore the token linked to that,
Seems a bit
FTT.
like jumping ahead a few steps, doesn't it?
Well, did you see the reaction? 120% rise in FTT tokens in 2023 because of that uplift.
Yeah.
Does that signal, seeds of change?
I'm very skeptical of these tokens that are tied to a specific exchange or platform. I think real crypto assets operate decentralized crypto networks, and they aren't tied to the success of any single entity or firm. So I think the activity that was happening around the FTT token was pure speculation. That's not a token that's widely traded in the United States. I don't think that is necessarily the right answer. I think that investors, as they're looking to invest in crypto assets, really need to do their own research and understand what is the underlying network, because the crypto industry isn't here to build crypto tokens where the price moves up and down.
No.
But then
here to build decentralized networks.
Why is tokenization the buzzword?
Well, so
because it is.
Well, it's incredibly important, and I think there are really strong use cases around it, and not as strong use cases around it. What we're trying to do with crypto networks is find an incentive for different parties that don't have any connection to come together and operate the infrastructure of a network. And that is something that, in order to have that economic incentive, you have to have a token. If you're going around and tokenizing something related to a specific company, that looks a lot more like a security and sort of misses the point as to why we are here building out crypto networks.
Are regulators missing the point or having to focus more on things they worry that are looking like securities?
Listen, I think it depends on the regulator. Hester Peirce yesterday or a couple days ago gave a phenomenal speech when she's a commissioner at the SEC. She absolutely understands the power of decentralization and the need to find an appropriate way for this technology to be built out. If you look at other parts of government, though, maybe not so much. I guess that's good job security for me at the Blockchain Association, because we have never-ending education to do of our nation's policymakers. But listen, it's a complicated space. There's a lot that's happening really fast. I do this all day long, and I can barely keep up with all of the developments. So it's hard to judge policymakers. But I do think, what we saw last time we were talking about FTX, what that has done has really brought the crypto industry to the top of the fold on every major news outlet. And I think that policymakers that before had dismissed this as something they didn't need to pay attention to are taking a really hard look. And I think we're going to see a lot of discussion and debate in the next Congress and through this last half of the Biden administration.
Well, we have the House Financial Services Committee Subcommittee on Digital Assets, Financial Technology and Inclusion.
Rolls off the tongue.
You can forgive me for looking down at my screen for that one.
No judgment.
My question is actually the opposite. When does the industry kind of look at itself and say, when do we get better at self-policing?
Yeah, no, I think that's an excellent question. And these are conversations that are happening within the crypto industry right now. I mean, there is so much transparency as to what's going on in the crypto industry because most of this information is on the blockchain. And so when you're dealing with these decentralized parties, there's a ton of information there. The challenge is you need to be able to translate that into something that's useful. And there are companies out there that help do that translation. But what we need to do is figure out there are a lot of good practices out there that different companies are doing. We need to make sure that we're picking the best ones and communicating those and sharing those best practices across the industry. So I do think we can do a better job at self-policing, and that is absolutely a focus of the industry right now.
I'm going to hold on to that word, useful. Because when you go to a policymaker and say, this is the most use case I'm seeing at the moment, what is it? What's actually decentralizing assets in a useful manner right now?
Yeah, no, I mean, I think that's a very good question. I mean, one of my favorite projects, I sit on the board of their foundation, is the Filecoin Foundation. I think, you know, Filecoin is trying to do a decentralized version of Amazon Web Services so that, you know, you can hook up servers to the network, you can, you know, provide that service if you have storage, you can store it in a way that's cheaper and decentralized. And so, you know, that's maybe not as sexy as some of the, you know, NFTs or things that are out there today, but it's an example of one that I think is very cool and will build a new infrastructure for the internet going forward.
Blockchain Association Executive Director Kristen Smith here with the two of us in San Francisco.
Yeah, great to be
here. Of all the
here.
conversations we've had, it's taken a while. Thank you. Now,
thank you, Ed.
Coming up, the Swifties get revenge as the Ticketmaster CEO apologizes for extreme price gouging. Shake it off. This is Bloomberg.
That Taylor Swift lyrics would be quoted by a politician on Capitol Hill? Well, Tuesday they were. There's a hearing to try and get to grips with what actually happened when her tour you weren't able to get a ticket for. Was it that too much demand flooded the system? Was it that bots were sucking up all the tickets? Or is it that there's too much control by one key company, Live Nation? It controls a whole host of live venues across the United States, but it also owns Ticketmaster, which is then the only way to get the ticket when you're at that particular venue. People say that there's not enough competition. SeatGeek CEO out there saying the only way to drive competition is to break up Live Nation and Ticketmaster that came together in 2010. This argument keeps coming back time and time again. Pearl Jam made this argument back in the 90s. It's been revisited on Capitol Hill, and now for the third straight time, they're going to digest whether really competition would help you get your hands on the tickets that you want.
Who'd have thought politicians quoting Swiftie, not just you? But ultimately, this is kind of fascinating, isn't it? That once again, people just arguing there is too much consolidation in a space. Interesting, on a day we were just sort of discussing the DOJ looking at Google, everyone's still looking at Ticketmaster.
Yeah, I confide in you. I bought some tickets recently. When you start the year, people say, what do I want to go to this year? They're often expensive. And when you look at how you buy them, well, actually, it's true. The Bloomberg reporting shows Ticketmaster is often the only option, right, other than in the secondaries market. But it's what people have been talking about on Instagram, Twitter, and taking to TikTok as well to kind of vent about their experiences. But it reminds you, why do we have oversight?
Yes.
Why do we have this discussion on marketplace competition?
And why do you have those select committees bringing up CEO of SeatGeek, for example, to say the only answer is to split them up? The competition is thin. There's a secondary market, StubHub, but isn't it interesting? On our own Twitter poll, we went to you, the audience, and asked what you thought. Most people said, where else am I going to be getting these tickets when itself, Live Nation, has more than 100 of these really great places to go and watch music?
Right, and that's the answer. Where else would I go? And it goes back to my point. You start your year, you go, which gig do I want to go to? Which show have I dreamed of? You only have one option.
Yeah. At the moment, Where Else Do I Go is the winner on that particular poll. But just, it seems to be a day here in San Francisco where we've talked so much about earnings. We've also talked so much about regulation, about oversight. It's a real story of Washington meets Silicon Valley at the moment.
And it never, ever goes away.
It doesn't. And that does it for this edition of Bloomberg Technology. But we never go away because Wednesday we have ARC's Tasha Keeney on the show.
Don't forget, check out our podcast, iHeart, Spotify, Apple, wherever you get it. This is Bloomberg.